Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. I want today to have a look at how the market unfolded yesterday, which was actually Friday, the 5th of February. And to be quite honest, it was an absolutely amazing afternoon for MTPredictor after about lunchtime here. And I wanted to show you this because this really sums up the cyclical nature of trading that I've been talking about in our multi-time frame analysis. In other words, there are times when the markets are unclear and quite frankly they're really hard to trade. And there are times like on Friday when the picture is absolutely crystal clear and trading is quite easy and the markets just unfold in absolutely perfect patterns. So I want to show you, let's start with the ES. Here's the ES. The market was declining down. So let's first of all, have a look at the large degree trend. Our STF was actually red all day, but remember we use our higher time frame charts to gauge our large degree trend. So although we had a number of setups, let's have a look at what the large degree trend was telling us. So for this we go out to the 15-minute chart. Here's my analysis on the 15-minute chart already. So what I'll do, I'll take this off and start again to show you where we were at. On the 15-minute chart, the market went up and made a high the previous day here on the 4th of Feb. And if you remember, we did another video a few days ago showing you that that high there on the 4th of Feb was actually the DP from the prior swing down there. So that caught that high. But also, I don't think what I showed in, in that video, but this was also, if I right mouse click, a 5-wave sequence. I'll just take that off. Can you see we had a 5-wave sequence up, coming in just at the typical wave 5 WPT. What we teach at MTPredictor is after the market has completed a 5-wave sequence, the first area of support and resistance is the DP from the prior wave 4. So for this we go back to the prior wave 4 here. We place the DP on. Remember, this is a leading indicator, so this was on the chart before yesterday even opened. So that would have been the first area of support. As you can see, the market breached that and had gone through it 2 consecutive closes here. So after this, the large degree trend is deemed to be down. Do you see this? There's your first 15-minute close there, and there's your second 15-minute close there. So after about 11:15, the large degree trend is deemed down. Down into where? Well, we go back to the start of the sequence. So if the DP from the prior wave 4 low is exceeded, the market will tend to go back to the DP from the start of the whole sequence. In other words, it will wipe out the entire prior sequence. So the large degree trend was definitely down. So let's now have a look at the shorter term chart. Alright, here we are back on the 3-minute chart. So here's our 15-minute DP. So after we had 2 consecutive closes, the large degree trend was deemed down. Would you have taken this buy setup? Maybe. This was about the time when the 15-minute trend was going down. So let's, for the worst case scenario, it's always good to show the worst case scenario. Let's place the analysis on and show that this could have been a -1R loss. Again, there are very few vendors who will show every possible losing trade. They tend to only focus on the good trades. But let's take the worst case scenario. So that could be a -1R loss. Remember, we use correct position sizing to vary our number of lots, contracts or shares to keep our initial risk less than 2% of a sample $20,000 account in this case. So this would be a 1R or 1 risk unit loss. We then had another setup here. Again, this would have been in the direction of the large degree trend because the large degree trend is down. This would have also been a losing trade. Down another -R. Now, as most people would sort of start to give up here, they had 2 losing trades. But the beauty of MTPredictor is because when the losses come through, the losses are kept small. Market then rallies back up again here. Again, large degree trend down. Right mouse click, place analysis on the chart. Market goes down, and here the profit, even at the first target, is 3R. So instantly you've made up for the 2 previous losing trades and made profit overall. So if you're doing just standard trade setups into the first target, that would have been +3R. You probably wouldn't have done any more trading because the large degree trend was deemed down. NQ, exactly the same. There was the first losing trade. There wouldn't have been one earlier. Here was your TS3 sell. This time into the first target for +4.2R. YM, exactly the same picture. This time there'd be 2 losing trades here into your TS3 sell for a plus 3.6R. But the point being is that the picture was the same, particularly on these TS3 cells here at 1242, whereas on each one of the USE minis, even including the Russell Index. So the Russell Index, the YM, the NQ, and the ES were all giving you sell setups around this 1242. This is what I mean about when the picture becomes clear. All 4 markets, we normally look at the 3, but you can look at the 4, are all telling you the same thing. The large view trend is clear. Everything comes together to be absolutely perfect. This is what I mean about having the clear pattern. When this happens, you really have some good trades, and that's what unfolded on Friday. Now that's all well and good, because you only made a small profit, because plus 3R, 2 losing trades earlier. Let's have a look at some advanced analysis. What happened after this TS3 sell here? Well, the market went down, but it didn't go down in any old pattern. Let's have a look at this. The market came down, rallied back up. It rallied back up, if I do Elliott wave intermediate, into a wave 2 or B, where you had a TS1 sell unfold. This could have been treated as a holy grail trade setup, because you're coming in on the wave 2 swing after an important high. The market then came down. What did it come down in? Well, if I right mouse click Elliott wave intermediate, it did a wave 3. And look where the wave 3 stopped. Right at our typical wave phi WPT. Absolutely perfect. Market then rallied up. Let's right mouse click here. It rallied up, but where did it rally up into? Right into a wave 4. Right into our wave 4 WPT. Absolutely perfect. Market came down, it declined down, right mouse click, Elliott wave intermediate, into a wave 5. Low of the day, right at the minimum wave 5 WPT. Absolutely perfect. After this, completed the 5-wave sequence, as I've already said on the 15-minute chart. The market tends to rally. It tends to rally into where? Well, the DP from the prior wave 4. So we go back to here, right mouse click DP, and guess what the market did? It rallied into the DP from the prior wave 4. Absolutely perfectly. So the market pattern after about 11:42 was a perfect 1, 2, 3, 4, 5, then a rally into the DP from the wave 4. NQ exactly the same, 5-wave sequence down, a rally back up. YM exactly the same, a 5-wave sequence down, a rally back up again. So this is what I mean about the picture being perfect and really clear, and the same on all the markets. Absolutely perfectly. So how could you have traded this? Well, you could have been more aggressive on your TS3 sell by looking to run it a bit further. Firstly, because you knew the large degree trend was down, you could have used your ATR stop to run it a bit further into about here. But of course, once the market got down into this low 5-wave sequence and you'd reached the first 5-wave sequence WPT level, start to trail above the 1-bar high. So you could have been stopped out here. That would increase your profit to plus 4.5R. Could you have looked to take a long trade here? Well, yes, because not only was this the end of a 5-wave sequence as we've shown, but the previous bar, which was this one, was a VS setup. Can you see the high volume indication on our volume there? It was red. So this bar was breaking below a previous low. Volume was high. The next bar failed to follow through. If we place our DP on, that's where the market reversed. In other words, the high volume in this bar was actually buying. Therefore, the professionals were stepping in to go long. Therefore, this would have been a good trade to take. Whoops, sorry, do the analysis. And you could have bought off the very bar, the low of the day there, up into the high there for a plus 2.6R. So for the more experienced users, you'd have known that that would be an area of where the market was likely to make a low. So you could have actually had a very aggressive long trade up there. I haven't even looked at this TS1 sell here. As I've already hinted, because this was a TS3 sell, the large view trend was deemed to be down. This looked like it was a wave 2. You could have pyramided here and looked to take this short trade as well. But where would you have taken it? Well, you might have treated this as a holy grail trade setup, because this was an important high. This was wave 1. This was wave 2. Down into the typical wave 3 WPT here. If I take the risk reward down to that level, that would have then added, remember added because this was a pyramid, in other words you're adding to existing positions, another potential 7.7R. Absolutely amazing trade. or perhaps you'd wanted to run this into the wave 5 down here, and again come out at that wave 5 or just above the bar high at that wave 5 low for again about the same profit as well. And this is where the more experienced user in MTPredictor can really maximize the tools in MTPredictor rather than just using your automatic setups and taking them just as they are. Gaining the understanding that we teach in our training webinars about how the markets unfold and the patterns that we have and the high volume spike setups we teach, and also what does a Holy Grail trade setup mean? Where is it in the 5-wave sequence? Well, it's the trading the wave 3 down here. Knowing all these things and combining them, not only would you have had a nice TS3 sell setup here for a potential perhaps 4.5R into that wave 5 low down there, but also you could have added, let's put that down, plus 4.5, you could have added another 7.7, 7.9R, let's call it 7.5R into here as you pyramided on that TS1 sell setup. Then you'd have known to then go long off the very bar of the low of the day. What a day to catch the low of the day like that. Absolutely perfect. Into the close there, or just before the close for plus 2.6R. So let's add this all up. Remember we had minus 2R to start with. So plus 4.5 plus 7.5. That's 8, 9, 10, 11, 12. You know, you could have had a 12 or 13R day there yesterday. Is that right? So plus 7.5 plus 0.5, that's 8. Plus 4, that's 12. Plus 2.6, that's 14. Minus 2 is back down to 12. Yes, you could have had an almost 12R day there yesterday. And absolutely amazing. So I wanted to do the video today to show you again that MTPredictor is not just about blindly taking these automatic setups 100% of the time. That's what automated trading does. That's why automated trading will never outperform a good human being, because automated trading doesn't understand that the market's going cycles. It doesn't understand that some days, quite frankly, the markets will be very unclear. The pattern, you won't know what's going on. The large trend will be unclear, and you should stand aside. But then suddenly, days like yesterday unfold, where you had an absolutely picture perfect clear trend on the large degree charts, as we've seen, beyond the 15-minute DP. You had exactly the same picture unfolding on all, in this case, all 4 markets here, exactly the same at just after lunchtime, getting those TS3 sells in there. Let's just put the analysis on the TF as well. Everything coming in absolutely perfectly. The market then came down in an absolutely picture perfect 5-wave sequence we've already seen. You had the opportunity to pyramid on the wave 2 correction at the TS1. You had the opportunity on the high volume spike to then reverse and go long on the end of the wave 5 to catch the rally back into the wave 4. I mean, this was absolutely perfect. It really was. So I'm hoping that you can see now how MTPredictor does, or we do what we do in MTPredictor. In other words, when the picture is perfectly clear, we have the tools to help maximize your profits and uncover some absolutely brilliant trades, all backed with our position sizing. So it means that when you're wrong, we keep the losses small, but when we're right, we can actually maximize our profits and actually have some very big trades in relation to the small risks. And that allows you to have very good profitable days like yesterday when everything comes together and the picture's absolutely clear. So an absolutely perfect example of MTPredictor at work in the US E-minis yesterday, which quite frankly was quite an amazing day once you become more experienced and understand what we teach with how the market patterns unfold.